So just want to make sure everybody's taken care of today. And at the same time, I do want to remind you that starting from next year, the courses will be live in person. So if this is your first time here at the webinar, we kind of added another webinar just before the 2 workshops are starting next week. So we do want to make sure we cover everybody. And at the same time, if you missed the last couple of webinars, here's your chance to review it. And it's going to be online as well. So if you're watching this online, hello there. And I hope it is more interactive. If you're not here, you're watching the recording, my email is just Brooke, my first name at trustyourtalent.ca. So call to action. If you have questions, if you want the slides, reach out to me. And Wendy here is the student ambassador of the day. So he'll help me out. And in case I have questions in the chat, and as I'm going through the slides and the presentation, I might not be able to attend to it. I promise to be here till the end to make sure all the questions are answered. At the same time, Wendy is also here to help answer some questions you might have. First thing first, I am not a lawyer as much as I want to be one for you. This is for my lawyer because I want to do everything legally and ethically. So when we talk about contracts, when we talk about how you want to set it up, make sure you reach out to your power team members. I'm talking about our examples, our experiences collectively as investors. So I usually first remind you to put your investor's hat on because this is the starting point of your journey. So if you're already a student, make sure you pass along the good messages because we do want to share the wealth as well. And besides financial planners, accountants, tax advisors, lawyers, perhaps you're getting into flips. Perhaps you're getting into, say, lease options. These are some of the strategies I'm going to cover very, very quickly because you only have just over an hour with me today. And the point is for you to look at, hey, these might be the strategies I want to focus on as the starting point of my journey. I will share my story. It's not about me. However, maybe there are some points that you could resonate with if there's some commonalities, or if you're like me, an immigrant, middle age, and you're looking for a starting point. This might be something for you. And it's okay if you're at different stages in life because we've seen enough students starting at different points. It doesn't matter where it is. The thing is, it is a system. It's going to work for you depending on where you are. And we don't always have to follow the same exact strategy or strategies. That's why this is where we're going to start to talk about what's a blueprint for you. And even though we're all different, Waddy and I, we started at a different point in life. And I look at Mike, I look at Josh and Candace, ladies, Hannah, Candace, we might be at different stages in our lives too. We might have different backgrounds. And my day job is in hardware repair, for example. And perhaps it's something different for you. I came as an immigrant in my teens. Perhaps you were born here. Perhaps you have Asian parents like me, or you're Asian parents like myself. Even so, it doesn't really matter. We're all different. However, just as TYT proved that we have more than 100 winners at this point. Everybody started at different stages in life. If you're old enough to know what United Color of Benetton is, that's basically our community. It just looks like everybody from everywhere. So I'm sure you can find something that's tailored to you as well. And you don't have to be everything, by the way. I know that a lot of people are here to buy back your time. And you're wondering, how do I do that? You don't have to be everything for everybody. And I see Margaret logging in as well. As ladies, or sometimes they say, if you want to have something done, give it to a mom. Because sometimes we think as moms, as a parent, you're supposed to do everything. You don't have to do that. That's why you leverage your team. You don't have to be the smartest person because you leverage their knowledge. I'm happy that you're here to leverage my time, my knowledge, my experience. I started exactly the same spot where you are, coming to a webinar and help other students like Weddy as a student ambassador. and gradually reaching my financial freedom and helping other investors as well. If you know somebody who's strong, make sure you leverage their strength. And if you know somebody is brave, leverage their courage. Sometimes we say, hey, you have to start from somewhere that's uncomfortable. That is okay, because somebody's there to take a look at your blind spot. And that's what mentors do. That's why we're here. So you don't have to make the same mistakes again. So I want you to visualize this.
Beat me, hate me, you can never break me. Will me, thrill me, you can never kill me. Chew me, sue me, everybody do me. Kick me, cut me, don't jump like a bite me. All I wanna say is that they don't really care about us. All I wanna say is that they don't really care about us.
I found a lot of encouraging clips or something that could motivate you. I think it describes what a mentor does perfectly. And we say we check your blind spot because we're pushing you from the back and give you that little force to keep you going forward. Even everybody in the community as accountability partners. So you don't have to be the bravest person. And it's okay if you have somebody who's really careful, who don't want to go ahead, because sometimes that's the person who can probably help you plan at the beginning. However, leverage other people's experience, leverage other people's courage, so you could have all together as a power team to go forward. And if you have none of the above, perhaps you're the one that's going forward. Perhaps you're the one who just want to go for it. And at the same time, if you're not, make sure you're the leader. You know how to leverage everybody else's strength. And even though we say, hey, you don't have to manage the property yourselves, you don't have to renovate or even flip the property yourself. However, if that's something you're great at and you're so passionate about it, make sure you're part of the power team too. That is completely okay. Personally, I love to deal with people. So I love to talk to tenants. I love to talk to my investors. So that is my contribution to the team. And one of the quote I didn't put down here, however, you might hear that a lot when you speak to people at Trust Your Talent. If you want to run fast, run by yourself. We're in this for the long haul. So if you want to run far, run together. So we're here running together. You're here to run together with your power team. One of the things we do at your mentorship is start to build your power team to get you started. And like I said, for myself, it wasn't a problem for me to build a power team because I don't find it hard to talk to people. For some students, it is a little bit harder. So that's why we give you script. We go to different meetings with you during the mentorship. During your time here, there's only a couple of things I do require from you. I appreciate that you're investing your time here. So I do want you to get the most out of your time. We always talk about ROI, most out of your investment. Since you invest your time, your return on investment in terms of your time is best when you focus, when you participate. First thing you do is turning on your camera. That's how you participate. And it's okay if you're eating, and it's okay if you're in your PJ. I get that, because sometimes we even have students watching the video or being here with me on Zoom live from another part of the world. And like Johnny and like Josh, some of us are in the East Coast and Weddy in Alberta. So we're all in different time zones, and that is okay. I'm having my lunch pretty soon. So if you're eating, that is okay. If you have your camera on, like Johnny, I love how you're devoted, even in your car at a parking lot. If you participate, it is like at a driving course. How do you get familiar with how it works? So here, it is a safe environment. You're not going to hit anybody. You're not going to lose any money. You're just going to test drive different strategies. So I know that acquisition of knowledge brings us satisfaction. Anybody listen to podcasts in the morning or inspirational speeches? All right, about a third of the people in the group, including myself, because I do think that even when you're acquiring knowledge or hearing what's out there, it really helps you to kind of solidify that, to get yourself started. When you're applying your knowledge, take action. That is when you start to understand how action taking will help you and take you to the next level. And when you really apply it, take action, that's when you feel fulfilled. That's why we encourage action taking. We award action takers at the same time. So once you're part of the community, you know that, hey, our goal, of course, to reach your financial goal. We do encourage people to start by taking action. So we have action takers as award winners in the group. We also have people who are creative, who are deal creators. Because when you're starting, I know that you might be looking at realtor.ca. You might be looking at MLS listings. However, good deals are found, great deals are created. If everybody is looking at the same deal, how do you make yourself stand out? So make sure you learn how to create great deal. By getting yourself started, I understand that you want to read through the slides. It is okay if you want to do that. At the same time, if it stops you from getting to the next topic, take a picture of it or call to action. Reach out to me. I will give you all the slides to help you learn and ask me questions. When you're reading, you're only getting 10%, which is great. That's a great starting point. And if you're reading every day, I do encourage you to do that, even just start from 15 minutes, 10 pages, whatever that is, to get yourself started and get the momentum going. Same thing with learning. If this is your first time learning about real estate investing, learning about even paper asset, that's part of our curriculum now. Even learn about credit cards, how to invest with credit card training, how to find the best deals, etc. So once you hear the words, I hope that makes a difference because like me, I have to see and hear. Sometimes when I'm reading, it doesn't register as well. Every time I read a book, I started by listening to the audiobook. If that's you, sometimes it's easier to start from there. If you don't have that time, I sometimes listen to the podcasts of the writer, of the author. So get an idea of who they are. And just a few tips that I learned throughout the process of learning. So if you help you see the examples, that's exactly what we're doing here. I simplify the numbers and the structure to help you learn today, because this is supposed to be for beginners. If you're here as a refresher, that is totally fine as well. I do appreciate that. And if you're watching it on the recording, perhaps you're getting 50% of what you're learning. And by participating, that's why you want to be here. By participating and mute yourself, that you're getting 70%. And I see that some of you are here alone, even though I know you're going to share it with your spouse, with your business partner. And that's also what I'm doing here. I'm sharing what I learned. So every time you learn something, when you have to repeat it and teach somebody else, that's when you get the 90% of learning. The point is, I want you to get to 100%. So besides focusing, make sure you're having fun. We don't always remember what we learned, but we always remember how we feel. And if you have that aha moment, you feel, oh, I'm learning something. I'm so happy about learning. Fulfillment, acquisition, and you always remember how you feel. So you might not remember all your teachers or all they taught you throughout the years since kindergarten, but you'll always remember a great teacher who make you feel great, who make you remember how it feels like to learn, to have fun. So this is the same environment. No question is out of the line. If it helps you to get to the next level, something that's stuck, you have burning desire to learn and burning question to ask, make sure you do that. You can do that by raising your hand. You can do that by putting in the chat. If you're still a little bit shy, we don't bite, and I'm sure I'm one of the most friendly person you'll ever meet. And before we get started, I still do want to know where you are and why do you think, even for me, perhaps you're already on the journey, you're already investing. What is stopping you from going a little bit further along your journey? So perhaps it's fear. That's actually one of the biggest things. However, surprisingly, by the time you're getting to this point, investing in your time, not a lot of people actually select fear as the reason they're here. Motivation, I get that, especially for those of you who have been sitting on your asset and wondering where you want to go next. Perhaps you have already started. You just need that little bit of motivation to continue, keep the momentum going. Or the knowledge, education is an investment. So I always say you're investing in your education the same way you're investing your time with me and with Weddy here and with a group of eager learners that I see on screen. All the resources here, the network, OPM, I'm going to talk about how to find at least some OPM to get yourself started. OPT, leverage other people's time, their knowledge, and finally, perhaps you just want to see an example to see how you can get yourself started and start to take action. I'm going to launch it right now. So if you can see it on the screen, please put in your answers. Can everybody see it? Okay, perfect. So you can quickly put in your answer. Sometimes the first answer that came to your mind is the right answer. Anybody been doing, like multiple choices? Usually your first answer is the right one. And that's what's really speaking to you. We're actually pretty even right now in the room. All right. Okay. I think everybody put in the answer. Thank you, everybody. I think this time everybody participated very quickly, not wasting any time. Love that, action takers. So can everybody see the share results on screen? Okay, actually fear is number one. Honestly, this is the first time that I've conducted this survey and fear is the number one answer. And even if this is not your answer, can somebody unmute yourself? What you think your fear is? Let's be honest. Do I have a volunteer? Josh!
I think it's the fear of failing, but I'm also very hard on myself. So I'm the fear of being even harder on myself for failing.
Okay, that's actually a big one. Thank you for sharing. I will address that, but Candace, you unmuted yourself, so I do want to hear if you have anything to add.
I think my biggest fear is just not knowing enough in a certain situation. So getting into a situation where I'm over my head or I don't know where to go or I can't afford the investment or different things like that. Just like getting in a situation where I just wasn't as smart as I could have been. That's probably my biggest fear with it.
Thank you. Thank you for being so candid. Weddy!
Market changes since what happened with the election last night. So things gonna change quite fast. So kind of predict the future.
Thank you, Weddy. I'm glad we're all thinking about it from all different perspectives. And it all comes down to fear as well. I'll just to share one quote with you from George Clooney, funny enough. So you either fail or you learn. And there's really no such thing as failure. However, I did get that because you'll be wondering, if I fail, will I ever be able to get back up again? That's one thing. That's why we say, hey, if the why is strong enough, you'll get back on your feet again, regardless, and you'll find out another way to make it work. I'm not saying all my deals are fantastic. However, can you give me one example that's something in your life that's important to you, you feel fulfilled, you feel successful, that you reach a certain point that you haven't gone through any hurdles, you haven't gone through any obstacles. So if there's obstacles, is it worth it towards the end? And Candace, one thing I also talked about is we talk about the best case scenario, the worst case scenario. If it's the worst case scenario, can I deal with it? Are there ways for me to do it? Another example I talked about is when I talk to my joint venture partners or my investors, I never take their last dollars. I never say, okay, do not eat. Let's make sure we get enough money for the investment. We never take the last dollars. However, when I talk to some of the investors or even some of the students at this point, and in one of the class, I'll tell you something interesting. We always talk about, let's gather our resources and see how much we have all together to invest. Then I know how much we can work with. Let's go through real examples to see what we can invest in. And when you're experienced enough, and that's actually a very good point. One student said, Actually, Brooke, I think there's unlimited funds out there because I know that if the deal is good, if the deal is great, I have unlimited funds. However, a quiet investor is a broke investor. So you have to get yourself out there. You have to make yourself seen so people know you have great deals. Once you have a great deal, that's a good problem to have. You're going to think about, okay, who I want to work with. I don't just want to work with everybody who brings money in front of me. You're going to start to be more choosy. So that's a good thing. And yes, sometimes we're wondering, where are the funds going to come from? If nobody's going to invest in it, think about, did I present it in the way that I'm giving this deal justice? Or is there any other way I could improve? It's an amazing deal. Why am I not able to find funds? Or it's an amazing deal. How do I get it out there? So one of the things, even though we talked about OPM, another thing is raising funds for your business. How do you present yourself? Why do you choose certain companies over others? Because it's the way they present themselves. And sometimes, and we even talk about election, or it's not always about logic. Even though we want to think that is the way, it's also how people perceive you at the same time. Are you out there? Do people know what you're doing? So once you get the momentum going, it is going to get a little bit easier as well. And this is just the starting point. I already said a lot, and I'm going to utilize the time we have together to go through 3 examples. However, in the workshop, you'll see all together in 3 days how you're going to put all the deals together. At that point, it's still just a sneak peek of what's out there and what advanced training at Trust Your Talent is going to be
Coming
like.
to your city. Trust Your Talent is the largest real estate investing academy in all of North America. They're hosting a live event that you definitely will not want to miss. We don't rush you into buying your first investment property. We equip you with the tools and knowledge to make that very first confident investment. You're going to ask how.
Build a strategy that includes both short-term and long-term investments. Set clear, specific financial goals.
Educate yourself continuously about market trends and investment techniques.
Surround yourself with a supportive community of like-minded investors.
Learn from our seasoned investors who have helped countless others reach their financial goals. Join the live workshop today. Learn the skills that you need to create the life that you deserve.
And if you're able to make it to Alberta, you can either pick Edmonton or Calgary. So I'll tell you how I'm going to pick, because I've invested in both cities. However, if this is the first time, for example, you're going to look at Calgary as a city, tag on another trip, a few meetings with a power team member, and look at different markets. So, we get into different markets. It's all the same process. You start by building relationship with your power team. So that's why we're going to have workshops in different cities, and also connect yourself with investors in different areas as well. We're going to make it easy for you. If you're going to the workshop in, for example, Edmonton, take a picture of the QR code that's under Edmonton, so November 8th to the 10th. And if you're going to the other one in Calgary, take a picture of the QR code on the right. And I do also want to remind you that existing students, if you do want to take a refresher, you could still do that as well. I do encourage you to bring somebody new. Say, for example, you have a joint venture partner who is wondering what you're doing, and when you're so excited talking about different investments. It's a lot easier if somebody does the work for you. And I can tell you also, Candace, for example, if you're looking for funds, people with the same mindset is a lot easier to go on the journey with you when you present them with the deal. So I'll put it out there, and I will remind you again towards the end. And a little bit about myself. If you haven't talked to me, I'm open to talk to new investors, or just for us to learn about what each other is doing. And that's basically how I invest my time right now. And I encourage Weddy to read the book, Buy Back Your Time. So Weddy, if you're reading the part where they talk about how Oprah planned her whole day, that is basically my day now. I start my day by, there you go, you actually got the book too. I started my day by planning my day, what do I have to do? So usually my working hour is from the middle of the day, about 10 to 2:30. So that's exactly the time right now. And we do that because we gradually learn to build a system. And one thing I also shared with Weddy is that, hey, we invest to buy back our time. I mean, a lot of people are afraid of getting into real estate because they're thinking that I'm getting into real estate to fix properties, to look for deals, and to close deals, to deal with tenants. I'm not going to have my time. I'm actually scared of getting in. I want to have a good life, but what if I get into it and actually bought myself another job and having less time with my kids? It's really up to you. And when you're starting, perhaps you're building up your capital, you're building up your network. So yes, you want to talk to people. That's going to be part of your day, part of your time. However, once you build it up, you'll see that, hey, if you reach financial freedom, right now, I'm looking at who I want to work with. I'm okay with trading my time for money. However, you have to do something that you love, so it doesn't feel like work. I know it sounds cliche. It's true. I know that we all have limited time. That is actually my fear when I started getting into real estate, because my journey started the same as you. Fall 2016, I'm sitting in a live workshop just like this. So we started from a live webinar. It's not a webinar at the time. It's just a 4-hour introductory workshop. So I started the same way. And I thought, okay, if I'm in my 40s and I want to get started, my fear is I'm not going to build enough wealth, even though I was already 40. So I know a lot of you are younger than me. You're already at a better starting point. At that time, I have no savings at all. So I thought, okay, we have wealth on paper because we have a property in Toronto. So lucky enough, appreciation. And right now, you're going to look at appreciation as cherry on top because you know how to take control gradually by learning. And I thought I want to replace my income. And after I replace my income, I want to learn about how to generate passive income so I don't have to worry. And I started when I was also starting to get back to work. I'm in my office right now. I started working when I was 40 again because I stayed at home with my kids for 10 years as a stay-at-home mom. So you can imagine how frugal we are. I was, because I was thinking I don't really have a way of generating income. I didn't even know how. However, I'm the one that took care of expenses at home, make sure we had enough money for RSP. We don't have to pay a lot of tax. And it just doesn't add up because when I started working, we actually paid more tax. And the kids had a lot of activities. Money started to go really fast, the same rate that we're making more income. So it didn't make sense to me. And the only wealth, like I said, was in real estate. So I thought if I'm going to learn about this, then somebody's going to show me how. I'm going to invest in my education. Our life was okay. We had enough money and it just felt like month to month. So I thought, okay, if I want to see if it really works, I started with lease option, thinking I want to replace my income because I'm not comfortable with dealing with a lot of tenants or flipping houses or even changing light bulbs. So I'm going to start with single family homes, and that's going to generate a lot of cash flow for me to prove that it worked. So it worked. I started with lease option. When I get into distressed properties, it's just with a group of people because that wasn't my strategies. At the same time, I have people in the community looking for partners and looking to raise some quick capital. So that's how I start to get into different strategies. Once you get into a lot of different deals, you have to get creative because you're not going to have unlimited residential mortgages, for example, even for ourselves. So I started to look into different strategies. That's how I tapped into multifamily, etc. My point is everybody start from somewhere. It's very tempting because we're drinking from hills. We want to test out all the knowledge you've learned. However, get yourself started first and focus on one or two things. It's more important to make sure you buy back your time. Another thing I want to focus on when I was talking to different investors is, okay, I'm going to share my knowledge. What's the fastest way? I don't always have 1 hour, 1 hour and a half with people sitting down with me like you do today, like you're investing in your time. I basically just wrote a book to talk about the very, very basics. So the path we're following, the system in my own story. So it's like my resume. It's an easy read because with ESL English, That's what I'm good at. Easy way of talking to people, easy English. I'm pretty sure it's ESL 2 or 3 level because I came from ESL. I had an idea where the level should be. So it's easy for investor to read. That was my goal. And by the way, everything you do, it's okay to be selfish, to have a goal for yourself, to have a goal for other people. For me, like I said, I want to put myself out there. This helped me save a lot of time speaking to a lot of people. I give it away, and also I sell it on Amazon because it is a very supportive community. When I just had the book out, it sold out in the beginning. So same thing, like anything with a system. If you want to write a book, I had a coach. I can go through how you get yourself out there, write a book in 10 months and get yourself on the top list at Amazon. There are tricks. Like anything else, I'm speaking to you today. However, I was crazy shy, and growing up in Taiwan and Asia, you're actually encouraged to be quiet and only raise your hand if you have to. I remember going to school, it's good to be quiet, and I felt comfortable not speaking because I was crazy shy, even for Asians. Even when I have to raise my hand to say I have to go to the washroom in class, I didn't have enough courage to speak up or say that. So for me, by speaking to people, by reaching out to people, that's also a learning process for me. For me, that's breakthrough. That's getting out there and be uncomfortable. And if you have a goal of infill, for me, for my family, since we couldn't find our dream home, or it wasn't even close, we decided to just build it ourselves. But in Toronto proper, it's crazy expensive. However, that was my second goal, besides replacing my income. And I'll just give you a quick creative financing tip. For example, you're thinking, okay, if I buy a house for another $100,000 in mortgage, that's a lot, or even $200,000 in mortgage. How you get qualified, another topic, we can talk about that. However, I look at it as if I have one more lease option deal, I can afford another $100,000 in mortgage. Think about everything you want to do. If you want to have a trip with your family, say $6,000 a year additional income, then look at how am I going to generate $6,000 a year to go for that trip. So I will go through how you calculate that number. If you're looking at lease option, joint venture, you don't have to take 100% of the profit, even if it's 50-50, meaning half-half with your joint venture partner, 2 deals, then you can afford another $200,000 of mortgage. That's how I look at it when I build my home. More importantly, after beyond financial freedom, and let me know, I do want to hear your story and what really resonates with you. And I know you have kids, a lot of us have kids. If your family is taken care of, you reach your financial freedom. What is next? So for me, beyond financial freedom, I kept thinking about that. I love talking to people, and I think I enjoy connecting with people as well. So I love the community, and I'm glad that TYT gave me the platform to do that. In the corner, that's my tenant buyers. When I wrote the book, I did get their consent to publish their pictures 4 years ago. So, because it feels great. That's why a lot of people got into lease option. And some of my mentees are in the picture as well. Also, other ways for me to get it out there is to have a lot of podcast interviews out there. So let me know where you are. If you just wonder about, for example, as an Asian, what are you going to do? If you want to talk about private lending, different podcasts, reach out to me. I also have a Spotify folder of all the interviews. So just to give you an example out there, enough about me. I do want to hear what you have to say about yourself. And that's basically how you start your journey. Thinking about, hey, where do I want to be? That is the REI fundamental. Even though it sounds technical, it's really about you. How to do your due diligence. And I think if you learn about how to do your due diligence, that's going to eliminate a lot of fear as well. So to get ourselves started, I know some of you in the community have seen this chart. I do want to just point it out there. It is how you get started. And I know part of the curriculum now is paper asset. Even though it sounds like passive income is, and we call it paper asset, in general, this is about how you put different buckets in your income. Consult your accountant. This is not always the same way as how you report your income, your corporate tax, or your personal income. It's not always the same. However, when you plan your financial future, look at, okay, what type of income do I want to accumulate at this stage in my life? So I changed that picture of it's either he or she or whatever you identify as. What's your purpose? What do you think you would identify yourself as? Usually when you talk to people, they will identify themselves as whatever they're doing. You would say, oh, Josh, talk to me about yourself. Usually people would say things like, my name is Brooke. I'm a consultant, a management consultant. I work for so-and-so. However, I think it's beyond that. Who are you really? Think about what's your purpose. And I listened to Impact Theory this morning on my way to work. He said he thinks that, well, Tom Bilyeu, the host, he said that he thinks the meaning of life is to reach your full potential. So to him, as much potential as you've reached based on who you are, that's how he measures his success. I'm just giving you an example, whatever it is for you, or perhaps you're thinking, okay, this is a cause that really resonates with me. For some people, it's building retirement homes because they've seen their parents getting old or even their grandparents. Or perhaps it's your religion, whatever it is. Perhaps it's your kid at this point in your life. So what does that translate to? If you do want to have more time, in general, we define to earn income as trading your time for money. If you're a little bit older like me, perhaps you have accumulated some RSP, you've worked a few years already, then you have some money to work passively for you. So these are different strategies based on different buckets of income. Usually fix and flip because you have to constantly look for a deal. In order to generate income, that's earned income because you have to always look for deals. Or wholesale. Now wholesale is a class that everybody takes as the fundamental class at Trust Your Talent. So if you're wholesaling, you're flipping contracts, for example. If you want a consistent income, you still have to trade your time for money to look for deals. So passive income, cash flow, that's what we consistently talk about. If you're looking for a rental property, would you get into it if there's negative cash flow? So there you go. Now you're a trained investor. A lot of the times, people coming to Trust Your Talent wanting to learn about how to cash flow. I start to realize that, hey, my single family homes don't cash flow. The condo I owned don't cash flow. I have a pre-construction. Once I close the property, if I rent it out, I have to every month put in $800 or so in it. And that's why you have to start to look into different creative ways of generating cash flow. Like I mentioned, when I got into lease option, I love the idea of single family homes cash flow, and I don't have to take care of the property. At the same time, income properties, once you get into multis, and by the way, you don't always have to worry about tenant issues, etc. Once you get into multis, a big part of it is property managers being on your power team. And you don't have to be there all the time. I've also seen people who manage income properties or multifamilies by themselves. By the way, if you see one of those, that's time for ways of getting creative or opportunities, because tired landlords is sometimes where you find vendor take back or other creative financing ways of financing a deal. Making money in the buy, there are different ways of looking at it. So for example, you might be thinking, where do I find money in the buy? Where do I find money in the buy? And that's a lot of the times what wholesalers are looking at. So getting into S&P now, once you look at the wheel, sometimes we call it Wheel of Fortune. So Mike, I'm gonna just volunteer you to tell everybody what S&P stand for.
S is you first want to pick a strategy. And then with that strategy, you want to find the right market where you want to use that and what's good for that strategy. And then you go and find your property.
Thank you, Mike. Love it. Good refresher. And a lot of the time, if you happen to pay attention to what I was just saying, a lot of people start from property. If they rush to get into a project and buy a property, just waiting for appreciation, that's where a lot of the time speculation leads to liquidation. You can write that down. Speculation leads to liquidation. And that's where I also found a lot of opportunities. Even my real estate lawyers call me sometimes, Brooke, I have somebody who purchased this property they couldn't close because they couldn't qualify for the mortgage and they don't have enough cash to close it. That's where you find opportunities in a lot of cases. So if, for example, your strategy doesn't work in that particular market, find other markets. So lease option, for example, it doesn't work in downtown Toronto where I am. So I'm going to look for another market since this is a strategy I do want to focus on. So remember, always start from your strategy, market, and then property. By the way, if you're looking at where you want to start, I kind of give you a little tip when I show the clip of students showing you, hey, there's short-term and mid-term and long-term strategies. Depending on where you are, your age, etc., you can think about these are the kind of strategies I do want to focus on. And it is okay because we said usually 3x3. It used to be 2x2 when I started investing. Right now, we look at 3 different exit strategies and 3 different strategies you're going to start to focus on. At your mentorship, you're going to focus on one strategy, one market, because we do want you to focus. However, as investors, as your portfolio start to expand, and also when you get into a project, we always say, let's look at what are the exit strategies. It sounds fundamental, and every time you get into a project or looking at a deal, always think about, this is very basic, always think about this picture, how it's gonna help you reach your financial goals. So keep that picture in your head as we go along. And this is a very simple format of income and expense statement. By the way, I look at it as when I was new and thinking about how do I look at myself as a business? If you have learned accounting or if you take a course about accounting in high school, for example, even companies have to do that, income and expenses, or even when you get into multifamily, income and expenses and taking out different types of income, operating income, debt servicing, etc. However, when you're starting, how do you know where you're going to go if you don't know where to aim and where your starting point is? So if you don't have a starting point yet, at least even put it on paper. Take a picture of this, and you don't have to. If you call to action, reach out to me and send you the slides. Just fill in your income and expenses. And I do hope you reach a point where you don't have to worry about your expenses at all because you'll generate enough income. I do want to share some stats, if you don't mind me sharing, every time I learn something new, because before the election, a lot of people are talking about how is the American in general doing in the current state. So if you're looking at the big picture, America in general looks great. And I know a lot of us are investing in paper assets. We look at NASDAQ. So if you look at the cap in US, it looks like their wealth is increasing. By the way, they're all held by the top 1%, and the gap of the wealthy and the poor is bigger and bigger and bigger. So basically, the 99% of people in the States, their living standard hasn't improved. And the top 1%, their wealth increased by 50%, and whatever you see is basically the rich people. I'm not against the rich, especially we're talking about wealth. My point is, we do want you to focus on getting to the top, so you don't have to worry about money. And this is kind of BTC, behind the curtain, not the Korean group. BTC, behind the curtain, this is what investors are doing, and this is the starting point. And if you have played the cash flow game, anybody played the cash flow game ever? If you haven't, it's a board game. The book Rich Dad Poor Dad actually was written so he can sell the board game. Because when you read the book Rich Dad Poor Dad, which I did in 2000, it tells you the idea, but it doesn't tell you exactly how. And I was like, okay, that sounds nice, but who is doing that? Who is borrowing money, making money, and who is the accountant that actually helping people doing that? So this income and expense sheet is basically from the game when you have to put down whatever expense and income you have. If it's not clear to you what asset and liability means to you, make sure you watch Tim's Daily Dose. And it's season 2, episode 2. And if you go to Trust Your Talent YouTube channel, financial freedom and financial independence, there's a difference. So for the time being, I do want to hear what's your definition. Josh, what is your definition of financial freedom? It could be anything.
Financial freedom to me is I have all the money I need I can choose what to do with my time.
Perfect.
My time is all for me because expenses are paid for. Above what I need to be at.
Thank you, Josh. So all your expenses are paid for. And that's when you can manage your time. Your passive income and your money is working for you. It's covering your expenses. That's exactly it. Johnny, do you want to share what is your definition of financial freedom or financial independence?
Well, my financial freedom is I make enough money passively so I can pay off of my expense and I can utilize my time a little bit better.
Thank you. Thank you, Johnny, for sharing. So thank you all, because I see how important your time is. So thank you all for being here. I do want to make sure that, hey, you're here and we're making a difference in your life, because we're in the business of helping people at least take care of your financial future. There's a lot of different things in your life. So I do think financial future or financial security is a huge part of it, at least the foundation of it. Mike.
I just had a question about when you were talking about strategies. What do you have any general age bracket for different types of strategy, like where you are in your life, where people usually are with regards to their accumulated income and all that sort of thing?
Mike, I appreciate that. Funny enough, I personally look at that just because I see a trend as I speak to different students. So yes, so even though you and I were at the same age, it might be different because some people don't have kids. Some people have kids. That's one thing. And that's in general, yes, because I see younger people, they probably don't have capital yet. So they have to flip, they have to wholesale to generate capital. So in general, yes. However, that's not set in stone. Because even though, say, some people start at 40, some people start at 45, I would assume, okay, you might have a home. However, we're in different cities. Like I mentioned for myself, there is some appreciation in my property. For some people, you're in different cities, you might not have that HELOC or home equity line of credit to get yourself started because we're slightly different. However, in general, yes, because in terms of timeline, for example, Mike, if we're 40, we are halfway through our career already, or our earning period, for example. So certain things, yes, we might not want to be as active. However, I still get into some active strategies just because I love it too. So yes, in general, yes. And sometimes, because you come to the webinar too, sometimes one of the questions I ask is, what is your age group? Because if we're talking about, topics are different every time we have the webinar. If I'm talking about RSP, I will usually ask you, what's your age group? Because I have an idea how much you have to accumulate or how much you might have saved. Okay, so thank you for that question. That is a big factor, not the only factor though. Hope that helps.
Yeah, thanks.
Thank you, Mike. So our goal, by the way, at Trust Your Talent is to help you create financial independence, because it could be different strategies. Like I said, it might be three by three. Within your strategy, one might be active. So financial independence is that the overall income you generate, for example, that year will at least cover your expenses. It might not be passive. However, when we talk about financial freedom, then we do look at that. And Mike, you kind of helped me answer that question. So how do you decide on which strategy to focus on and why? Weddy, do you mind contribute? Because you're a little bit more experienced, so I do want to hear, how did you decide on your strategy or strategies?
All right, now because I'm maxed out on my personal loans, we have to go through the commercial route. So my strategy is more multi-department. But I mean, I also do join with other teams or other partners. If I have extra cash and I'm not doing anything or waiting for a deal, then I just make it, put it to work as well
Okay.
instead of waiting. And also keep looking at any other opportunity that doesn't require we call it deal. So for example, I mean, basically like what I mentioned, you need different source of income. So we actually looking at um, something called infinite banking. So that also could be another source of income. Yeah. So anyway, we can generate cash flow that to help add to our portfolio.
So your investment now is focusing on cash flow?
Yeah, cash flow for sure. And then also long-term equity build up.
Equity build up. Okay. Thank you, Weddy, for sharing. Josh, I'm just going to volunteer one person because Josh, I do want to hear, how do you decide on the strategy? Where you want to start?
I decided to go with fix and flip to try to gain some more capital sooner. And then we are going to go into probably rent to owns and possibly multifamily after that as we kind of get the corporation and
set up
going.
Okay, thank you. And I went through my intro. That's kind of how I paved my way along my journey. So different strategies at different times for different reasons as well. And if you're looking at, okay, where should I get started? For short term, Josh, thank you for sharing. You want to look for a flip opportunity, for example, to accumulate some capital. So like I said, I sold quite a lot of properties when we had to build our home. Yes, we went over budget. However, that's different. That's an emotional purchase. I'll admit that. And at the same time, I do still want you to have some fun with where you're going to invest as well. So, for example, I mentioned there are people who invest in certain properties because perhaps investment retirement home is what they're passionate about, or helping other tenants. For example, if you grew up seeing your parents struggling to buy a property to pay for mortgages, you might be thinking, I want to help other homeowners to become homeowners in training to get themselves started. And lease option might be a strategy that speaks to you. So everybody's different. Or if you have the urge to make ugly houses livable, then perhaps flip is for you. Or even income properties, why not fix up a few more units? And by the way, if it is your first time seeing this chart, LO, lease option, at Trust Your Talent, we call rent-to-own lease options. So rent-to-own is the street name. SA, service accommodation. We don't just talk about Airbnb, even though a lot of the times when you talk to people, that's the first thing they thought about. When you say service accommodation, they immediately use the term Airbnb. It's more than that, because there's also student rentals, there's service accommodation, there is also rooming, housing, etc. That's included in the curriculum. So infill, you can infill single family homes. So infill basically means building from ground up, or you tear down a house and put in a house, plug it in there. We usually call it a more advanced strategies for students because that's usually the path everybody is taking. So if you look at how OPM, the funds are lined up. When it's short term, even though the interest rate is high, the short-term funds will give you the flexibility, will give you quick money in order to help you finish the project. So say, for example, Josh, if you have a flip that you can complete in 4 months, even if you are sharing your wealth 12% a year with your investor, so say 4 months, that's a third of it, you're literally effectively just paying 4%. That's not a lot considering what you can get accomplished. Joint venture is used for midterm lease option. So even though Weddy said they can no longer qualify for a residential mortgage, what a lot of people do is they find the deal and they find joint ventures, partners who can qualify and come together to get the deals done. I do want to remind you that, hey, there are different vehicles out there. There's RRSP, there's lease option. The reason I put RSP as midterm is that you're not going to take the money out right away. At least everybody on screen or in the room here, I don't think you're going to retire tomorrow. And you're not going to trigger withholding tax in case you need money. However, the fund is there. People first. If you still do need the money, emergency, yes, you can take out money from your RRSP. So for long term, usually a mortgage is long term. I do want to remind you that it depends on how you structure your deal. Even if it's multifamily, even though I put income properties as a long-term strategy, if you have a joint venture with somebody, you decide that after 5 years, we will have to decide how we're going to exit. Then from long term or even 3 years, you set it up based on what your goals are. So even if it's considered long-term strategy, it might be a merchant strategy depending on how you structure your deal. So that's how you get started. I'm going to go through simple examples of the 3 main strategies everybody's looking at when you're thinking about how to structure your real estate portfolio. Okay, so this property, I have this property in the book as well. I simplify the numbers for the purpose of education, everybody in here. So this is a property early on in my real estate journey that we flipped. The property was purchased in the low 200s. Renovation cost, excuse me, $70,000. And not as experienced as I was, I realized later on we still have to put in landscaping of $25,000. By the way, it sounds like a lot. However, curb appeal makes a difference. And the house was sold actually pretty quickly. So the total money in, if you look at $200,000, we didn't have a mortgage on this, by the way, because we thought we could complete this project pretty quickly. $200,000 and $70,000 and $25,000 are private money. They were collected at different times. That's why I separated for you to give you the picture of how it looks like. So quick flip, the after repair value is $435,000. Full disclosure, this property is in London, Ontario. It's actually a very good student rental as well. I wish I had kept it. Regardless, we make money at the time. I wasn't the only person in the deal. So if you look at the proceeds, easy math, $435 minus all the money we put in or borrowed or leveraged. So the proceeds after 4 months, it's $140. If you can consistently find a deal like this, 4 months, 140 times 3. 140 times 3. That's how much capital you're generating. So anybody generating capital at this point, okay? By the way, Josh, and if you're not generating capital right now, or perhaps you have lazy money, then you see how you can leverage a deal and leverage each other's money at the same time. So like I said, even though you might have to borrow $70K and $25K for 4 months at 12%, if you run through the number, that's $3,800. Remember, your proceed is $140 to get the deal done. To get the deal done, that's the money you need. So even if you share the wealth and debt servicing $3,800, you're still profiting $136,000. I know not everybody have $200,000 sitting around, perhaps at this point. Anybody have $75,000 lazy money to work? Okay, I do, and I want to have my money working for me. Okay, when somebody is doing this, I'm thinking perhaps if you look a little bit harder, and once you go through different vehicles out there or possibilities out there, I'm pretty sure if you're close, you can find it. Anybody have $25,000 lazy money sitting there? Because we actually collected the $25,000 afterwards. Okay, thanks for the nod. If you don't, $25,000 is not that hard to find. And also, I used to have this as part of the curriculum. Then at Trust Your Talent, we realized, hey, you can go a little bit further, even with just credit card as one of the OPM. So there's credit card churning class right now for everybody who is interested. So every time if you're telling me, Brooke, I want to fly to this live class, I don't know if I have funds right now. Credit card churning is another way. We fund hotels, we fund trips, or even things you love. So these are a couple of balance transfer deals out there. Actually, last time I checked, they actually sweetened the deals because I think it's even harder to get new members. They do want to attract new members to get credit cards from these institutions. That's sometimes why they want you to transfer balance from another institution to theirs to take advantage of the balance transfer. So if you're not able to get 25,000 at this point, look at these deals. It's really not about how much it costs you, it's about how much it makes you. So even though I mentioned 3,800, that's how much it's going to cost you to find 25,000. However, that help you get the deals done. So let's assume that the same case, the proceeds 140,000. By the way, when we were looking at capital and the profit, I want you to think about ROI. By the time you are an experienced real estate investor, a lot of the time you have zero money in the deal. However, a lot of the times you do have to contribute whatever it is, your knowledge, your time, or whatever you love to do. Okay, so in this case, remember the ROI. This is how much we put in, 295,000. If we just look at return on investment, for the time being, if you're happy to take out your calculator and just run the numbers, do that, because that kind of gives you an idea, the feeling of how do I calculate return on investment? 140 divided by 295. Simple math. 47%. How often do you find a deal or invest your money and see a 47% of your investment? Okay, so think about what it can do for you. And remember the 12% we talked about, the private lending? If you utilize $140,000 proceeds and just invest in somebody else's deal, because perhaps you flipped a few houses, you deal with a few contractors, you're thinking, okay, for summer, I like to travel with my kid. Let's just lend this money out. At 12%, by the way, that is $1,400 per month. $4,000 per month once you have that capital to invest. Okay, just quick math. I like 12%. I like even numbers because when I explain the numbers to you, it's easier to see how the number works. So that's how you invest passively. If we take advantage of $25,000 balance transfer, so initial investment, now you don't have to put in 295,000 because you can get 25,000 from the credit card balance transfer. Remember, there's 1% balance transfer fee. So now consider that as your cost. Your return on investment right now, remember how much money in. So how much in, how much out? That's usually how you calculate return on investment. Simple grade 8 math, I think, or probably 7 or 6 if you're in Asia. Regardless, if you just use basic math, how much in, how much out, you get $140,000 out. However, money out of your own pocket is less now. So if you run the math, now your money is running even faster for you. Another way of looking at return on investment is how fast your money is running for you. So just by leveraging 25,000 in this particular deal, your return on investment is close to 52% now. Okay, so do you see the power of leveraging now? And just as a guideline, if you haven't decided what strategy to focus on. So Mike, thank you for bringing that up, depending on what stage in your life. Perhaps you're thinking about, I do want to flip. The flip example I gave you, that was a very good example. And if you're looking at, okay, if I'm not getting 140,000 per deal, by the way, that has to be shared as well. So if you're looking at flip or distressed property, how much that is going to bring you? So just as a guideline, if each project can bring you $20,000, look at how many deals like that you will need to help you accumulate enough capital. The average income in Canada is $70,000, by the way. So if you look at 70,000, you basically only need three deals, a little bit more than 3 deals, 3.5 deals to help you reach your financial independence goal because you replace your income. Okay, remember financial independence is to replace your income. Financial freedom is when you have enough passive income to cover your expenses. So 3.5 deal, then you're financially independent. So if you're looking at passive income, if we look at the chart, income property 150, remember after stabilization, because a lot of the times, that's also one thing when you get into income property. When it's property first, we look at opportunities to increase value, what we call force appreciate. So you might not be able to collect the passive income you're looking at right now. However, once stabilized, you're looking at $150 per door. And think about how many doors do I need to reach my financial freedom goal. This is passive income. So if it's $3,000 that you need 20 doors. That sounds like a lot. I know when you're starting to invest. If you have a 10-unit building, you just need 2 properties and that's it. If you're looking at lease option, and if you're still able to qualify, you can enjoy a cash flow around $1,200. If you can qualify for 3 properties, still 36, just 3 single family homes, you're there. If you have to joint venture with somebody else, divide that cash flow by half. Okay. If you're planning to see where you're going to be, take a picture of this. And if you're coming to the workshop, we're going to go through the numbers a little bit deeper dive as to where you want to be, how you're going to negotiate, how you're going to find deals like this. So this is a live deal, by the way. I want to go through at least the basics of strategies with you. I have investors who are interested in getting into, for example, multifamilies with me. How am I going to have 3 days with an investor to say, okay, I'm going to teach you everything about income properties if you don't have the time? And by the way, if this is the first time you're in a webinar with me, make sure you go through the numbers and just understand this one number. Just understand this one number at this point to help you quickly analyze. If it's a deal, I want to go a little bit further and do my due diligence to find out about the numbers. I grab this number. I even give you the MLS number. I grab this deal. Every time I come to a webinar, I look for deals that actually make sense for me to invest my time or your time to get into the next level of calculating the numbers. Okay, don't get stuck on the numbers because I'm going to walk through this with you. Like anything you learn in class. That's why we have recordings. That's why you have the material. It's okay. Personally, I think when I took lease option, it took me at least after mentorship, after refresher, and even at the workshop, I heard it 6 times before it finally stuck. So don't worry if it's your first time. And if you think you want to reach out and clarify, totally open to that. By the way, if you have a strategy coach, reach out to your strategy coach when it comes to how to plan your future like we did previously, or even if you have quick numbers to run. Does that make sense for you to look at deals like this, looking at your portfolio? Okay, so in this deal, that's the gross rent based on the listing. It's a 5-unit multifamily. So 1 4-bedroom and 3 2-bedroom, 1 1-bedroom. I like multifamilies with a mix of different rooms. Okay, personally. By the way, when you're starting to take the class, some people are talking about what's the average price per unit. There's a lot of key indicators once you start to learn the ins and outs. However, when you're just looking at the building, a building with a good mix or all bachelor units are not supposed to be the same per unit cost. Okay, just a quick tip there. So in this case, it is in the listing, by the way. The net operating income is $45,000. I calculated this for you. The rent based on what's in the listing and the expenses, the net income is $49949. So the cap rate, look at the formula on top. What is the cap rate? So basically the net operating income divided by the purchase price. Okay, the net operating income divided by the purchase price. So before you learn about multifamily, net operating income doesn't include mortgages or debt servicing. Okay, it's just net operating. Remember, with income properties, basically the building qualifies because these are the numbers that they look at and evaluate the value of the property. So quick number, net operating income 45949, divide that up by 625K. Okay, that's where you get the number. So the cap rate looks high right now. I just only based on the numbers they gave me. And debt servicing, I use a 6% interest rate and 25% down payment. So I was a little bit more conservative, 25% down payment. So that 75% loan to value is borrowed in this case. Just run the numbers with me. Once you start to learn about mortgage apps and run the numbers, or if you just ask your mortgage broker, let's just run with the numbers. The debt servicing 33,000 roughly. So if we look at the cash flow, remember your net operating income is not taking into consideration of your debt servicing. So 49,000 minus debt servicing, that's how much cash flow there is. Oh, I round off the number in debt servicing, and when I actually calculate the cash flow, I didn't round it off, so $6 different slightly. Your cash flow is 1,041. Okay. By the way, you can calculate per month. So basically, that's about $200 per door. So it meets the criteria, by the way. It meets the criteria. So far, this deal works. Okay, if we just run through the numbers. So think about the numbers, think what's in your portfolio. Does it make sense? This is very, very rough number. Remember, I mentioned I just look at the MLS. I know the realtor, that's actually the listing realtor by chance. I haven't verified all the numbers. I'll just remind you with one thing when I put in the numbers, when you quickly run the numbers. I haven't put in property management yet. I haven't put in 8% of property management yet, okay? Just so you know. So things like that, things about vacancy, and ask the expert in the market, what's the vacancy like right now? Right now is claimed to be fully occupied at this moment. In the listing, it also said in February next year, the rent could be increased to this number. However, I only calculated based on the information out there. Do your due diligence, trust, and make sure you verify. And before you get into a market, remember I said I didn't include property management fee. If this is a new market for you and you saw this deal, you're like, oh, the number worked at least at first glance. Then make sure you reach out to a property manager and start to set up your power team. Last but not least, lease option is another strategy a lot of investors utilize to generate cash flow. When I have 10 minutes with my joint venture partner, this is basically what I said to them. I don't call it rent to own, and same reason at Trust Your Talent, we call it a lease option because there are two contracts. We don't fix the toilets, we don't fix the property. It's basically contracts that dictate how the deal is going to look like. There's a lease, so before the tenant buyer who is going to buy the property later on can qualify for mortgage yet, they're still renting. So there's a lease. Nothing that different from a regular lease. Option gives them the option to purchase the property. That is it. The option for the tenant buyer to purchase a property. Once we get into joint venture and legal terms, etc., option, obligation, the right, they mean different things. Option meaning that they have the option to buy the property. However, they also have the option not to buy the property. It's an option, not an obligation. When we get into things like agreement for sale, there is an obligation to buy. Okay, so I'll leave it with you just to remember that option is the option to purchase for tenant buyer. We're making money every step of the way. This is my latest lease option. I put the house there just to remind me how the numbers go through to go through this example with you. So the tenant buyer comes in, what we call initial option consideration. Any contract has to have at least $1 changing hands in order for the contract to take effect. So even if you're buying a car at the car dealer, you're thinking, I want to buy this car. And this happens. Even sometimes they have the car in the lot and somebody else had the contract first. They didn't put even $1 to secure the car. Somebody came in, give the dealer a better deal, and then the car is sold to somebody else. My point is, make sure you put a little bit of money in the deal to make sure that contract is valid. So the tenant basically put in the 20,000 to say, hey, whoever the operator is. So Johnny, I want to get into this deal. So 20,000 is to say that basically I want the option to purchase. For you, as an investor, that's money in the buy because that help you close the property with additional $20,000 basically. So during the period, there's cash flow, what everybody's talking about and what we love. There's a lot more number and detail in there. However, just remember that every month, tenant buyer comes in what we call option to purchase and rent. Rent is just market rent. A little bit more ins and outs, and your mortgage broker can help you along the way as well to help the tenant buyer to qualify for mortgage, to help the process go a lot smoother with your power team. 1150 is what they put in as option. Option payment will be converted to down payment once the tenant buyer decides to exercise their option to purchase. So whatever they put in 1150, even though that helps you increase your cash flow every month. So during the 4 years, and this is a 4-year lease option, your total cash flow is 82. By the way, it's 1,700 per month of cash flow. Likely, I'm going to take this deal on myself. So every month for this deal, I have additional 1,700 per month. So at sale, by the way, for lease option, the purchase price a tenant buyer will purchase is already predetermined. So you can calculate based on how much mortgage you're going to pay down at the end of the term and how much your initial investment is. You can calculate your ROI already. So in this case, the initial investment is $84,000. That's also with the help of tenant buyers, $20,000. And proceeds from sale. By the way, proceeds from sale is after you paid off the mortgage, you pay the lawyer, depending on where you are. Sometimes there's land transfer fees, etc. And also you also credit back the tenant buyer's option consideration. Because by the end of the term, they basically already have that as part of their down payment. So take that all into consideration. By the way, just look at the number if it's your first time looking at this. Like I said, even when I go through the advanced class, I went through refresher and I went through my mentorship. I already advertised. It still takes me a while to get familiar with it. If you run a few times, any numbers, including income properties, you'll get familiarized with it. So in this case, cash flow plus proceeds as sales, divide that by how much money in. That's my annual return every year, 34%. Okay, 34%, not too shabby, even though I've also shown you a case of over 50% of return on investment. However, I found lease option as a strategy to take control because you know how much you're going to sell the house at as well. And I do want you to remember something. Even when we talk about working with partners, I do want something who's committed as a tenant buyer. I do want somebody who's committed as a joint venture partner. They invest in their future. Same thing as investor. You're investing in your future here. So you can enjoy that time freedom. Are they coachable? And I get that even for myself. There's some old beliefs that is still there. The old fear that is still there for tenant buyers too. Because a lot of the times they have been living paycheck to paycheck, or they've been tenants. They never know how to be homeowners until then. So they need to be coachable, like anybody that you'll be working with as well. How do they follow credit repair if they're not coachable? If they're gonna buy another car behind your back? So same thing. And as investors myself, as somebody who's constantly learning, I found a lot of parallels as well. We want to learn, and thank you for being here and being so coachable and be open as well. Even though I mentioned so much, I mentioned, hey, a family of 4. This is how much you're going to spend. Of all the strategies I've already talked about, how you're going to structure your future. Look at this as a guideline. So if I'm looking at whatever your goal is, for some people, if you're single, if you don't have kids, perhaps you only need $4,000 to be financially free. If you're in Quebec City, based on the chart, even if you're a family of 4, you can be financially free, have 3 deals every 2 months, work on 1 deal at a time. I roughly threw some reasonable numbers in the chart for you to look at. Hey, if I want to look at my financial future, what should I be focusing on and put in my portfolio to help me reach my goal? We kind of touch upon lease option. If you can find a deal similar to what I showed you there, even if you're finding a joint venture partner, not taking on the deal, just if you can take it on, one deal will give you 1,700. If you need to look for a joint venture partner, you're each enjoying $850 per month as cash flow. Okay, income properties. If you start with a suited unit, even if you just have 2 units, if the cash flow rate, when I started investing, smaller multi still cash flows, 2 units, 3 units. Later on, even once you refinance, once you take on more equity, pay more mortgages, it might not. You might have to look into bigger multis as well. Off topic, however, just a little nugget here and there. So at the same time, look at really what it means to you. That's my whole point. What does it mean to you? What do you want to focus on? So Josh, in your example, replace one of the strategy with fix and flip. Okay. And perhaps you kind of say you have some funds to invest, so you can also diverse. And for myself, I also look at paper assets as passive income. However, don't be aggressive. You still have to have a safety net. Be reasonable as to what numbers you see. I know sometimes we see the market go up and then we're enjoying a crazy return on investment. However, be reasonable and make sure you have funds or reserves. If you haven't seen this, this is the map I'm following for you today. Start from you, cash flow, return on investment, and like Weddy said, I do want to build some long-term wealth. Yes, and it depends on where you are. If you're still young, you're building up capital, perhaps having money sitting in the piggy bank is not your current goal yet. Regardless, keep this in mind. What are your goals? Cash flow, return on investment, or wealth? Usually in that order, because you have to take care of yourself first. Take care of your basic expenses first. I hope you're educated and feel inspired and having fun today. And remember everything in 3. Even your 3-tier structure. I want to make things simple enough for you. I put out 3 examples of 3 strategies. And if you're looking at your goals, separate it into 3. Short-term, mid-term, and long-term goals. And what's your overall view based on the 3 buckets of income as well? Okay. So thank you everybody for being here today. If you haven't decided where you want to be, take a picture of this because at least you want to make sure you know where you are and there's a GPS to follow. Johnny, do you have a strategy coach? I'm sure you have.
Not yet, but for the lease options, I'm very interested to get into it, but just wondering when I first start, do I have to get, because it involves a lease and an option, probably 2 separate documents, right? Do I have to get it like structure first before I go get the deal, or do I get the deal then structure the documents?
You can get the deal first. Even though when I was a student, they asked us to get structure set up first. I realized when you are setting up a corporation, it takes about a week. And be safe, budget 10 days. And you can get corporation done pretty quickly these days. So once you have a deal, set up your corporation, you still have time. However, start talking to an accountant and a lawyer first. So you have somebody to get it set up for you very quickly.
No, what I do have my corporation already. I just wonder, is the paperwork that I have to set up first, or I should go get the deal then set up all the documents and stuff?
You have to get the deal first because there's going to be what property it is, how they're going to run the numbers based on the purchase price of the property, etc. So remember the example I gave? The purchase price, the market rent is based on the property, right? The fair market rent, etc. So get the deal first.
Okay, thank you.
No problem. So Johnny, since you don't have a strategy coach yet, take a picture of this and remember to speak to a strategy coach. if depending on where you
Oh,
are at.
strategy coach, I do have. I'm with Andrew.
Okay, good. You're taken care of. So for those of you who are new, Saket, I hope I pronounced your name right. I know some of you already do. Hi,
Yeah, that's
Saket.
correct. Hi. Hi, Brooke.
How are you?
I'm good. How are you?
Good. Have you had a chance to talk to a strategy coach yet?
I think I did once, I think last month, sometime back, but I don't remember who it was. But I can
Okay.
find out.
Are,
Yeah.
are you going to the workshop?
No, I'm in GTA, so I don't think I'll be able to go.
Oh, okay. You can fly. We can actually talk about how to find your first churning or bonus point to get you fly. Regardless, that is okay. Take a picture of this, and I think you can start by talking to a strategy coach yet, even though
Okay.
you don't plan to go yet.
Okay. Okay, I'll do that.
Yeah.
That's a good start. Thank you.
That's a good start. So this is the QR code for the event again. So Johnny, I know you're not far. You can go take a refresher, or you can even go on the field trip too. And I do want you to remember how it was like to get yourself started. And we put together this clip I do want to share with you. Oh,
Anyone can buy a property, but not everyone can succeed. They say it takes 10 years to master a craft, but with our framework, you can master financial freedom in 1/10 of the time.
I found TYT. I went to their first webinar, and at the end of it, I was pretty moved. I booked that flight, headed to Edmonton to find out if these people were real, if it was what they say it was. Other groups are completely different, and the community is made up of everyday, regular people who just want to do better. They're trying to improve their lives, they're trying to improve the lives of their children, the people around them, and everyone's so giving. The value they provide to each other and to themselves is unmatched.
thank you, everybody. I do think sometimes you have to be in it to feel what the community is like that we've talked about. However, to get yourself started, just learn about how we set up the system. That's basically only enough time I have for you today to just go through the system, how it looks like. So how we talked about, hey, you have to start from your goal, your why, and who you are first, then get into the next step. How does that translate to when it comes to the financial foundations? I mean, when it is into health, I'm starting to tap into health as well. So same thing. Once you have financial foundation taken care of, I'm sure you'll have more bandwidth, the energy to get into different things, or even things you love, by the way. And we kind of answer questions along the way. I appreciate that. Since you raised your hand and you've unmuted yourself, thank you, everybody, for being here. I'm going to be here answering questions. Josh! Did I answer all your questions?
Yeah, I have to take off though. Thank you for everything.
Thank you, everybody. Thank you, Mike. And thank you, Weddy, for being here, taking attendance and letting people in, answering questions in the chat.
Oh, no worry, anytime.
And sharing. Thank you. And thank you, Johnny, for sitting in the car and still spend your time with us. Thank you, Candace. Thank you, Saget. Good to meet you for the first time. Margaret, Hannah, have a great rest of the day.
I've got just a quick question for you, bro.
I'll stay here for you.
Okay. And it has not really to do with this, but with all your properties and property managers, do you ever, I'm sure you have, but property managers that haven't put people in that you think, like, do you designate the type of people, like for the class of the neighborhood kind of thing of the property? Like if you have a class B property, class B or A neighborhood, you don't want class C minus D people that go in that property and then, should be like a family, but they load it up with 10 people kind of thing.
Okay.
But have you had ability to go back at your property manager? Because I'm dealing with one right now where like the house is just a mess and probably wrecked. I haven't actually seen it, but because I specifically asked them, and it's a single family house, to vet the people, get these type of people in this age kind of thing because it's a small community area. It's in New Brunswick, but they didn't do that. So now the property is a shambles and all that sort of thing. And I have it in writing that I want you to do this, but they didn't do any vetting of the tenants or anything prior to. They just went out and got some,
I knock on wood, I haven't had that experience yet. However, I have experience where I had to fire the property manager. I'm just thinking in your case, it's time for them to send an eviction notice or at least deal with it.
We did that. We actually had it. We went through Service New Brunswick, and they actually were going to give them 3 months, but these guys actually said no, we'll be out. We found a place to live, so they were there for October, and then they're still in the process of leaving in the next day or two.
Okay. I mean, there's sometimes are unforeseen circumstances too. Talk to your property manager. See if you still want to work with them, or if you do, how do you go forward from this point?
Yeah, and that's the other thing because I'm running low on good property managers in New Brunswick, or where my property is, and I've spoke to other people there, and it's like it's not easy.
It's not easy. And talk to also realtors. Sometimes smaller property managers work with realtors. Actually, a lot of the times I found new, or because investors work with a lot of the same property managers, you're right. Talk to realtors if you have somebody that you work in the market. See if you can find somebody different.
Right. Okay.
Yeah. At least, you're already taking action. Thank you for sharing that, though.
Yeah, no, that's why right after, because I'm out at work right now, that's why I can't go to the field trip. But right after that, I got to fly to New Brunswick and find out what the hell's going on back there.
I hope that's a little blip. I mean, there's always something going on as investors that we have to deal with, right?
Yeah.
Yeah.
So more credit card points.
Yeah, more credit card points. Second, sorry, I do want to acknowledge everybody, and I do want to make sure we finish not too much time. Any questions? Because you muted earlier.
Yeah, no, I was just listening to the presentation. So I think the content was really helpful for me, especially the lease option strategy. I wasn't aware of that. So I have been doing some things on my own, but this was completely new for me. So that was great learning.
Thank you. So I do encourage you to speak to a strategy coach for sure. The reason being, sometimes, they just give you a different perspective. Even if you're already an investor, you can see how you optimize your portfolio as well.
Right. That's true. Thank you. And I'm like working and listening, so I kept myself on mute.
That's okay. I get that. And I do appreciate you also spend the time with us too. Thank you, everybody. So enjoy the rest of your day.
Thank you. Thank you.
Thank you.
Thanks.
Bye.
Bye.